Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, July 22nd, 2025, we're focusing our attention on the SPY ETF, which tracks the mighty S&P 500. Recent headlines are buzzing with news that the S&P 500 and Nasdaq have both soared to new record highs, with the S&P 500 reportedly closing above the 6,300 mark for the first time ever. This remarkable achievement comes just ahead of a pivotal week dominated by big tech earnings, which are clearly driving investor optimism. Despite these gains, S&P 500 futures are showing little change, hinting at a cautious sentiment entering today's trading, and Federal Reserve Chair Powell remains a key figure to watch for future market direction. Now, let's turn our attention to the daily chart to understand the broader trends at play since March 2024. What immediately stands out is the strong, consistent uptrend SPY has maintained, marked by a clear pattern of higher highs and higher lows. We can identify several significant corrections within this bullish trajectory. For instance, a sharp dip occurred in mid-April 2024, pulling prices from the 520s down to the 490s, before a strong rebound. Another notable pullback was observed in early August 2024, where SPY retreated from the 550s to the 510s, showing that buying pressure quickly reemerged. The most substantial recent correction pushed prices from highs around 610 in February-March 2025 all the way down to the 550s, and then again in early April 2025, where it dropped to the 500 to 505 region, which served as a critical long-term support level, demonstrating resilience. This V-shaped recovery after those significant drops in April 2024 and particularly April 2025 clearly indicates robust buying interest at lower price levels, reinforcing the underlying bullish sentiment in the market. The current rally, which aligns perfectly with the news of record highs, has pushed SPY past previous resistance points, solidifying the upward momentum. The psychological 6,300 level, recently breached according to news reports, is now turning into an immediate support zone, a critical flip for bullish continuation. Shifting to the 1-hour chart, we gain a more granular perspective on recent price action, specifically from late June to mid-July 2025. Here, we can observe the tighter consolidation patterns that led up to the latest surge, indicating a buildup of energy before the breakout. The market has seen a consistent, albeit somewhat choppy, grind upwards, with frequent small pullbacks that were quickly bought up, reflecting healthy price discovery and demand. Volume analysis on this timeframe is crucial. We often see spikes in volume during upward movements or when new resistance levels are being tested, confirming the strength of the moves. The 620 to 625 range has acted as a strong short-term support in the past few days, a level to watch for potential bounce opportunities or as a stop-loss reference. Let's zoom in even further to the 15-minute chart, specifically focusing on the trading session of July 21st, 2025, from early morning UTC until closing. This ultra-short-term view reveals the intraday dynamics that led to yesterday's record-setting performance. Notice the strong upward push that occurred during the main trading hours, confirming the news reports of SPY breaking above 6,300. The high recorded on this chart at 631.54 truly reflects the peak of this bullish wave, demonstrating aggressive buying. However, we also see a slight retraction towards the end of the day, as the price consolidated around the 628 to 629 range, suggesting some profit-taking after the initial surge. This intraday volatility highlights the importance of precise entry and exit points, especially around significant news catalysts like big tech earnings. So, what does this all mean for SPY? Let's discuss reasons to be bullish, bearish, and key levels to watch. From a bullish perspective, the market's ability to consistently set new all-time highs, even after significant pullbacks, indicates immense underlying strength and investor confidence. The upcoming big tech earnings, if positive, could provide the next powerful catalyst, potentially driving SPY even higher, perhaps targeting the 635 to 640 range in the short term. The general market sentiment, combined with the S&P 500's role as a leading indicator for U.S. large-cap equities, supports a long-term bullish outlook, especially if economic data remains favorable. On the flip side, reasons to be bearish include the possibility of the market being overheated, making it vulnerable to sharp corrections or profit-taking, particularly if big tech earnings disappoint or if Fed Chair Powell hints at a more hawkish monetary policy. A strong rejection from the current highs, accompanied by high selling volume, would signal a potential short-term reversal, especially if it breaks below immediate support levels. In the short term, keep a close eye on the 628 to 630 zone. This is our immediate support, and holding above it reinforces the bullish trend. A break below 628, especially on increased volume, could signal a retest of the 620 to 625 support band, a level that has proven resilient in recent weeks. Long-term, the major support levels at 580 and the crucial 500 to 505 area from the April 2025 low remain highly significant. Unbiased predictions suggest a 65% likelihood of further upside towards 635 to 640 if big tech earnings meet or exceed expectations and Powell maintains a supportive stance. Conversely, there's a 35% chance of a pullback to the 620 to 625 range, especially if earnings underperform or if there's any unexpected hawkish rhetoric from the Fed. Look for confirmation through trading volume. Strong buying volume on pushes higher and lighter selling volume on pullbacks reinforce continuation patterns. Stay vigilant for any surprising macroeconomic data releases or geopolitical events that could impact market sentiment, as these can quickly override technical patterns. Always remember to manage your risk with appropriate stop losses and consider taking partial profits at key resistance levels to protect your gains.